Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
This is going out there. It's July 15th. I'm Marin Katusa, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know what term I'm sick of hearing? We need to follow the science. I mean, how many times are we here? I mean, every single politician, all the media, we need to follow the science. I don't care what side you're on, left, right. That's the term. And when you hear that, I want you to think of one word. It's a pretty simple word. Most of you understand it. But when we hear that on TV the next time, when someone, I don't care who it is or what side you're on, they say, we need to follow the science when it comes to coronavirus, the word that should immediately pop into your head is bullshit. When we look at the coronavirus, it's center stage again. Not that it's left, but now it's dominating the headlines. Some states starting to close restaurants, bars. Like California, we have cases rising, new records, especially in Florida, Texas. Again, it's being those news stories, headlines, top of the news. We also had some great news this week on the vaccine front from Moderna and Pfizer. I'm going to go through later on in detail why those two phase 1 studies were very, very positive. But listening to so many people on television, I mean, the doctors, the so-called experts, politicians, and even when you look at parents, your friends, I mean, everyone's suddenly a know-it-all when it comes to COVID. And then they post on social media or they talk, to whoever. And everything they say is like fact. It's like a religion to them. You need to follow their advice. They're right. Like, dude, you need to wear a mask or you're going to get the coronavirus and die. Everyone in Florida is not wearing masks. Look what happened to them. I mean, others are like, don't ever wear a mask. You don't need one. I mean, it's the opinions vary so much. I mean, how about some middle ground here? Why is everything like black and white? Yes or no? I mean, how about wear a mask indoors in all stores, which is mandated in Florida now, which, by the way, everyone I see in Florida abides by that rule. Most people in Florida wearing masks right now, even though you're going to see a little picture of someone taking a picture of a couple of kids on a beach, and everybody thinks it's all of Florida. They're so irresponsible. It's crazy. Even when it comes to locking down states again, and those opinions are so far apart to where people are saying, we need to go lockdown. This thing's spreading like wildfire, to where, hey, we got to send our kids to school right now, August, next month. States need to open. Disney parks need to be open despite record cases in Florida. It's all over the place, everywhere. I'm hearing how the cases surging in Florida and Texas. Hospitals are at full capacity, no beds left in ICU. And I got a good reach on this, guys, because this podcast not just goes throughout the country, but globally, getting lots of downloads. And just people sending me some research from crazy sites. And some of them aren't even crazy sites. Some of them are like, popular sites, but just don't have the facts right. I mean, guys, hospitals are not at full capacity. There are beds in ICU. Actually, I love the report, which was from yesterday, where journalists, and this is from Orlando Health, reported that from 50 labs, they're showing a 98% positivity rate, right? It was even a news story. And I said, wait a minute. Whoa, wait a second. All fault. It's not 98%. It's 9.8% is a positivity rate for COVID cases. I don't know, you forgot to carry the one. What happened there? 98% to 9.8%. I mean, and also in Orlando, Veterans Medical Center, the same day said it had a positivity rate of 76%. And they crunched the numbers and the data. They showed a positivity rate for the center is actually 6%. I mean, this is data, right? This is data. This is stuff that we're making key decisions on that impact lives. And we're all over the place. All over the place. We'll follow the science. Where's the science? Because right now, everyone is a know-it-all, and you just You can't disagree with anyone, or can't be opinion based or saying, hey, you know what? I'm not going to wear a mask outside. I feel comfortable. If that's your choice, that's your choice. You should be wearing masks indoors. We should. Even though it's not hardcore proof, most people that wear masks, I can tell you, are not wearing them correctly. Because when you're wearing a mask, you think you're okay. You're going in stores, whatever, and you're tapping things. As soon as you get out of that store, everyone does the same thing. As soon as you walk out of the stores, you take the mask off and you're touching your lips. So it's not to say that the masks don't work. It's to say maybe they're not being used correctly, and maybe we need to upgrade a mask or whatever it is. But that's why you're seeing studies all over the place. I could give you studies supporting both. Masks do work and masks don't work, and from good sources. But why is that? Why isn't there like a universal? Why can't we get on the same page here? And why does this bother me so much? Because I'm a research analyst for 25 years. And the information we gather as analysts determines the decisions we make. You guys are subscribers. I take pride in my research. Anyone a subscriber, look, because I'm doing newsletter videos that are 35 minutes long. Seems like a long time. Seems as crazy. The positive rate is probably about 96%. And I provide a PDF just in case if you hate the video. But I go through why I'm recommending that stock using my tools, which I pay a lot of money for. And you can see exactly why. Not that I'm going to be right all the time. People are wrong. But you're going to see my thesis with me in the video, sharing my screen of why I'm recommending this stocks. And I can tell you, it's not a simple system that's, hey, you do this, this, and this, and this. No. There's thousands of factors that I look at. Some of them are more key to others, depending on the industry, depending on the management team, depending on the company. But you get to see that up front. I take pride in that. Again, I'm going to get things wrong from time to time, of course. But my job is to find out all the information possible, question everything, interview experts, do boots on the ground research, talk to people that have a different opinion than me, and respect their opinion before coming to my conclusion or my thesis that I'm going to share with literally over 100,000 people who are on my platforms. That's a big responsibility. And when I look at coronavirus, this is a subject I've been reporting on thoroughly since January. I think that COVID problem in China much worse than what's being reported, how the virus is spreading from person to person in January, even though the World Health Organization, told everyone that there is no clear evidence of this. Right? They even tweeted that on January 14th. Of course, they deleted that tweet. January. Crazy. Yeah, I told you how China's lying to us in February about how severe this is, how fast it's spreading, how every sell-side analyst was dead wrong comparing COVID to past pandemics. They say how this time, the virus, based on what we saw with SARS and the economy bouncing back, this was different than anything we ever dealt with. We weren't shutting down full economies. China was fully closed. And predicting it's going to result in an imminent market crash early February, since China, the world's growth engine, again, completely shut down. Saying how the U.S. would have more cases than any other country, which many people, including my friends, thought I was absolutely crazy after we just had, a few COVID infections. That was on the West Coast. That happened like March, very early March. Reporting to you how people get infected the most were those with respiratory problems, those over the age of 60, how kids are largely immune. I even introduced my listeners, subscribers to the Johns Hopkins site that started to track COVID cases and deaths in every country. It's amazing. Now everybody uses it. It's great. Back then, nobody even heard of it. And this was still early February. Our stock was trading at all-time highs, right, on market. Now, all this is documented. We provide a timeline and everything I said at Curzio Research website. My podcast that I taped, they're archived for anyone to go back to see exactly what I was saying. And guys, I'm not saying this. You know me if you're a listener. I'm not saying this because I want a pat in the back. I wasn't right on everything. I actually called Jim Cramer because I was so concerned that we should close the stock market. We need to close the stock market. If we're going to shut down economies, we needed to close the stock market. What I didn't anticipate is the government will go absolutely insane and spend 12 and a half times, $6.5 trillion handing people checks of $3,000 for families, increasing unemployment by an extra $600 to the point where people were making more money on unemployment than they were when they were working. Sorry. I don't think anybody anticipated that. But that's on me. I was wrong on that. Again, I wasn't right on everything. So those that listen to my podcast for many years, I'm not being arrogant in saying this. I just had access to really great sources all over the world. I spoke to people who live in China, give me the real story of what was going on when they were in quarantine. I interviewed people in Italy who were quarantined and provided videos on that Curzio Research YouTube page. You could see them. And this is where I learned about the precautionary measures that were being taken in Europe and Asia, where everyone was wearing masks. We're just doing that now. They were quarantining people for 2 weeks who traveled into these countries. We didn't do that. They were taking temperatures, everyone's temperatures at airports. And they had police in the streets organized, making sure people were actually following lockdown rules. None of that was in place in the US. And we're like, hey, we're Americans. We're the best, the greatest country on earth. This shit's not going to impact us. Yeah, go America. We're great. I mean, it was definitely going to spread here. It was spreading in those areas, and those guys had all these restrictions in place. We had none. I interviewed leading doctors, spoke to infection specialists who did not have an agenda and need to be on TV every 2 seconds. And one person who attended Johns Hopkins and was a hedge fund manager, very close friend, told me a month ago when we were deciding to open up bars and gyms in some places, that's absolutely crazy. It's going to spread. That's absolutely crazy. Haircuts, that's fine. You monitor the people that come in one at a time. Where I'm getting my haircut, they have people, they have the appointment set up and you're waiting outside for someone else to come in, which is cool. Bars, the music's loud. You're yelling. You're holding so much interaction. You're touching without masks. Come on. Gyms, come on. I mean, it is the class that people take right next to each other. But analyzing more data through February and March. I mean, I was getting sent reports from dozens of experts daily to the tune, reports of 20, 30 pages long and getting like dozens every single day. And this data was different from what I was hearing in mainstream media. And how different? Let's look at a timeline of what the so-called experts have been telling us about the coronavirus, okay? Let's start in January. Since we're supposed to be following the science, that's what these guys are doing, following the science. We need to follow the science, I love that. We need to follow the science. And heads up, I don't care what side of the aisle you're on. I don't care what political party you belong to. I'm just going to read through these, and it's going to blow you away of some of the stuff that's been said in this timeline. January 8th, WHO praises China for identifying a novel virus in a short period of time and says that this is a notable achievement and demonstrates China's increased capacity to manage new outbreaks. On the 14th, January 14th, WHO announces preliminary investigations conducted by Chinese authorities have found no clear evidence of human-to-human transmission of the coronavirus. This is the WHO talking to China. This was going on since November in Wuhan when this was spreading. This is January 14th. January 22nd, Trump responds to whether he's concerned about a possible pandemic. He goes, no, not at all. And we have it totally under control. Quoting him. Anthony Fauci, January 23rd. The U.S. wouldn't implement draconian shutdowns of cities like what was occurring in China. And he says there's no chance in the world, quoting, that we could do that to Chicago, New York, San Francisco. But hey, China's doing it. Let's see what happens. You're looking at January 27th, the Biden campaign, including its top coronavirus advisor, Ron Klain, praised China for being transparent and candid. Oh, really? This was spreading rapidly through Wuhan since November. You closed Wuhan, but yet you allowed people from Wuhan to travel outside of your country, which spread it all over the world. Transparent, huh? Pretty cool. January 31st, Trump says, hey, you know what? I'm restricting travel from China. And man, everybody ripped him. Biden says no time for Donald Trump's record of hysteria, xenophobia, fear-mongering to lead the way instead of science. Love that term again. The New York Times, a disease outbreak specialist, they quoted Dr. Michael Osterholm, saying that Trump's decision to restrict travel from China was more of an emotional or political reaction. Vox tweets, is this going to be a deadly pandemic? No. Yes, they deleted it. This is all January 31st. February 2nd. The virus has infected 15 million Americans across the country and killed more than 8,200 people this season alone. That's CNN tweets. It's not a new pandemic. It's influenza. This is February 2nd. Same day, Governor Cuomo, Andrew Cuomo, New York governor. We went through this before. Zika virus, Ebola, all this stuff. Let's have some connection to the reality of the situation. And as the doctor said, catching the flu right now is much greater risk than anything that has anything to do with the coronavirus. New York City Health Commissioner, February 3rd. Barbara tweets, as we gear up to celebrate the Lunar Year in New York City, I want to show New Yorkers that there's no reason for anyone to change their holiday plans, avoid the subway, or certain parts of the city because of the coronavirus. February 17th, getting to the end of this. Listen, this is good, guys. Dr. Fauci announced that the risk of the coronavirus infection in the U.S. is minuscule. Listen how close we're getting, right? March is when it crashed. We've seen the infection start hitting early March. March 2nd, Mayor de Blasio tells New Yorkers to, hey, just get on with your lives. Get out of the town despite the coronavirus. Nice job. What happened to New York? The worst hit state by far, most deaths. March 4th, Anderson Cooper, Sanjay Gupta said the flu right now is far deadlier. So if you're freaked out, again, it's March 4th. If you're freaked out at all about the coronavirus, you should be more concerned about the flu. And you can actually do something about it and get a flu shot. Nice and easy. March 8th on 60 Minutes, Dr. Fauci. Right now in the United States, people should not be walking around wearing masks. March 17th, Cuomo. That cannot happen. It cannot happen legally. No city in this state can quarantine itself without state approval and have no interest whatsoever and no plan whatsoever to quarantine any city. How long has New York been on lockdown now? Still mostly on lockdown, right? By the end of March and into April, guys, here's where everyone flip-flopped. Again, these are people who are supposed to be following the science, following the data. And the flip-flop was incredible. It's a totally different tune. Instead it changed from, hey, don't worry, we're Americans, we're going to be fine, to holy shit. Lock yourself inside your house. Don't talk to anyone. If you go outside, you're going to die. Show said, if you look at the world, I mean, this is a worldwide damage. This is a damage to the U.S., but this is a damage to the world. Yet organizations saying, don't go to church. You're allowed to burn them, but don't go to church. WHO says we need to keep lockdowns in place. The person that was praising China, right? The organization praising China, everything is cool. Their response is great. Coronavirus doesn't spread from person to person, even though it's been doing that for 3 months in China, which is your job to be monitoring. But China didn't want to share any information, let any doctors in there. And now Dr. Fauci says recently, I don't think we should shake hands ever again. Ever again. Now, look, I'm not going over that timeline to throw Governor Cuomo, Dr. Fauci, President Trump, former Vice President Biden, most infection doctors. I don't want to throw them under the bus. These guys have been sharing their forecasts in the media. I truly believe this, guys. That a huge percentage of everyone listening to this, everyone out there, most people, we want to see fewer fatalities, fewer infections. We want to return to our normal lives. Remember, we used to go to concerts, take your family to the movies, having a drink at a bar, the social gatherings. And man, it's hitting us. It's crazy. And we look at COVID, it's nothing like we've ever seen, at least in a generation, right? There's no playbook here. And going from, hey, this isn't a big deal, stay calm, to complete panic, hysteria, worst case scenario, it's kind of par for the course when it comes to something that scares the shit out of us, right? That's normal. But for those of you who want some facts and listen to my opinion from someone that's been talking to great sources, again, feel free to disagree with it. That's okay. You can do that by sending me emails, frank@CurzioResearch.com. But here are some things that I hope will be helpful to you. That's why I'm doing this. I have no agenda here. We all want to save lives. We all want to get rid of this coronavirus. But the things that are going to be helpful for you, so there are roughly 3.5 million people who have been infected with COVID in the U.S. Fact. That amounts to just over 1% of the population. We're looking at around 328 million. Of those 3.5 million people, close to 140,000 people, as of right now today, have died in the U.S. That amounts to 4% of the people who contracted. And that might seem like a high number. But if you look from mid-February through May, nearly 80% of these people who passed away from COVID were over 65 years old. That's 80%. Where the median age of fatalities was 78 years old. That comes from the CDC. And overall, when we look at fatalities compared to our total population, the percent of people in the U.S. who die from COVID amounts to 0.04%. Guys, we cannot shut down the entire economy with a 0.04% fatality rate. The consequences are enormous. We're seeing that. And how long has this been going on for? It seems like years of coronavirus. It's 5 months, if you're counting mid-February. It's 5 months. That's it. And look at what it's done to our economy. Listen to the banks on their calls. Not Goldman Sachs. Cover that later in my educational segment. But listen to what the banks are saying that they reported. Like it's gone from, hey, June was really good, getting better a little bit, to it's gotten worse, the coronavirus. Saying the only thing that's keeping us up is you better hope the government keeps spending money because people are hurting. They're hurting. But the consequence of keeping it closed, depression, job losses, tens of millions of people, bankruptcies, including tons of restaurants that can't even make ends meet, operating at 75% capacity. You want them to close down? Rising crime rates. We're seeing that across the board. Foreclosures, poverty, and crazy things you wouldn't even think of, where in China, domestic abuse cases are rising since their lockdown. Not going to even make fun of that or whatever. It's just, hey, it's true based on their research. Suicide rates rise for every 1% increase in the unemployment rate. I mean, this is Oxford University research. Drug overdoses are rising. I mean, numerous studies on stuff that'll blow your mind. Just Google it and look for good sources. The consequences of keeping everything shut for a 0.04% rate, which, by the way, is going to go up. And I'm not saying to blindly open up everything and not track the numbers, because death is a measure that we need to look at. Why? Because infections are going to skyrocket. This is the playbook. This is normal. This is what stretching out the curve does. What does that mean? Well, the curve had tons of cases in the first month and a half, and we didn't have the capacity for hospitals. And that's why we're sending ships with hospital beds on the coastlines, California, New York. Now we have ventilators in place. There is capacity. We stretched it out. And now that you open up economies, more people are going to get it. That was the goal all along, wasn't it? You stretch out that curve. I've seen hospitals, they have capacity in Texas and Florida, despite what you hear. There might be a couple on the Miami end where, cases are a little bit out of control, more South Florida. But even Texas, you look at the statistics, you're looking at the people reporting this, are saying, hey, and a lot of data coming in is false. It's crazy. So do we need to monitor these numbers? Of course. And since Florida is seeing the largest spike in cases, everyone is wearing masks now. Everybody. I don't care what you see, what you hear. Most bars and gyms are closed again. I wouldn't have opened them in the first place. I'm going to tell you something. And I'm being real here, since I make fun of Florida a lot of the time, since I've been living here for 10 years. Shell shock. Still can't believe people hate to work here. It's weird. Florida's getting this right. Opening up their economy. More people are getting coronavirus. The average age, though, is 37 years old, where COVID has a super low rate of fatalities among this demographic. And most of the time when they get it, those symptoms are mild. That's why you're seeing low death rates as a percentage of the people who are getting tested and getting this infections. We're not seeing as many 60-year-old plus people contract the virus now because they're staying safe, and people understand that we can't be around these people. We have to wear masks around them. But when we look 6 months from now, Florida is going to be one of the leading states with the fewest cases and one of the safest states. Because we have to assume that we're not going to get a vaccine for at least another 12 months. That means people need to get the coronavirus. That's going to lead to herd immunity, which is normal. And by the way, speaking of vaccines, Moderna, Pfizer with BioNTech, both which use mRNA technology, something I'm very familiar with, followed for a long time. Basically, technology creates proteins, antibodies that help attack the virus. So it's using your own immune system to attack the virus. This is a technology these two companies are using. Both released amazing early stage data this week. Pfizer a few days ago, Moderna was last night. Incredibly promising, to the point where Pfizer and their vaccine produce antibodies that are 1.8 to 2.8 times higher than the levels of antibodies found in recovering patients. Guys, if that's too advanced, you just know that's a huge deal. That's great news. And the symptoms were not that great. Headache, fatigue, fever, nothing that was life-threatening. I've been skeptical about the hype around vaccines. There was been extremely optimistic we were going to get one in a couple of months. But these two are very promising. The Moderna vaccine produced antibodies that block the ability of the virus to get into the cell, which is, again, this is phase 1 early on. Antibodies, same thing as Pfizer, at or above levels of people who have been infected with COVID. Vaccine doses across the board, well tolerated. Phase 3 trials geared towards people who need the vaccine the most. But, which is important, Jenner also said that if everything goes as planned, we get the FDA approval, the quickest we can deliver the vaccine, or it can be available commercially. They just said 2021. They didn't specify when in 2021, which was interesting. They didn't say, hey, the first quarter, no, they said 2021. I mentioned earlier, coronavirus has impacted America and us since around mid-February. It's 5 months. And I know it seems like it's longer. It's only 5 months. And we're not likely to get a vaccine for at least another 9 to 12 months, which means we need to continue to monitor all the numbers, including hospitalization capacity, death rates, two most important, and keep people who are older, more susceptible to getting severe cases, isolated and safe. And what I'm going to say right now is very important, because the way, I don't know why our sentiment is like this, right? Maybe it's just social media. Everyone has opinions. Maybe it has trolls. But we're under the opinion when we make decisions that there's no consequence. There's consequences to every decision we make. Every decision we make. In World War II, once we entered the war, it was going to result in huge casualty of our troops, right? But the alternative was to let Hitler take over the world, and none of us would probably be here today, right? Which was not an option. But people were going to die. People have to make those decisions. With coronavirus, there's no foolproof solution to this problem. We have to realize it. We want to make the best choice possible. And closing state economies across the board, it's not an option. It's not going to cause the virus to suddenly disappear, or like the CEO of Salesforce believes, that if everyone wears masks, COVID will disappear in 3 weeks, which zero data supports that. The virus isn't going to disappear. Yeah, the numbers will go down, but it's not going to disappear until we have a vaccine, and we don't know if that's a fact or not. Well, it places so much hope in a vaccine, even with those positive phase 1 results that we saw this week. But remember, the quickest the world has seen a vaccine come to market is 4 years, and that was back in the 60s. So it doesn't make sense to have all this hope on a vaccine. You have to play it that, hey, we're probably not going to get a vaccine here for another 9 to 12 months, which is longer than the coronavirus has impacted us so far. And look what it has done. Talk to your friends. Talk to your families. Yeah, you're looking at the market going higher because the Fed's providing tons of liquidity, spend 30% of GDP so far to prop things up. But man, you're looking on Main Street, it's terrible. It's horrible. You guys know what I'm talking about. Some of your business happen to be thriving. But I know you have friends where, I have friends that own gyms, that own restaurants. A lot of restaurant owners here. But it's crazy because when I look at New York, and New York reported that it had 0 deaths for a full day, and I think that might have been Sunday or so. Listen, I love the fact that people aren't dying. But New York's economy remains closed for the most part. And I have to tell you, my friends, people that I know that I was there for living there close to 40 years. It's like dire situation. Crime rates surging, police retiring, the cost of living crazy expensive, which, hey, I have access to restaurants and bars. All of it's closed. What are you paying for? Commercial real estate. Holy cow. There's a lot of people that aren't generating income right now, paying the high cost of living in the major city. But New York needs to open up. They haven't opened up yet. They shut down completely because it was so bad there, of the way they handled it. And who knows who would have did better. And again, you want to follow the science, but all the science is wrong. I just showed you. I mean, who did I mention in that timeline? The WHO, CDC, the president, Biden, Dr. Fauci, all the people that we're following, follow the science. This is what they've been saying and how dead wrong they've been. Again, I'm not picking on them because this is something new. But you have to use your common sense here. New York needs to open up slowly. They're going to see cases spike, which is fine as long as they follow the playbook. Florida got a little out of hand, getting in, bars and every single restaurant opened and gyms and stuff. Be careful. You want to slow it down, but you have to monitor the hospitalization rates and the deaths, which are in line. You need to slow it down a little bit. That's why you see a couple places close. But as you see those cases spike, it means more people are getting tested. It's a good thing. And for example, New York, only 60,000 people are getting tested daily in New York right now. Yet Florida, that number is close to 150,000. Why is that? New York was the most impacted. More and more people should be getting tested. They don't have symptoms because they stayed inside. But again, the virus isn't going to just, disappear. It's not. So they got to go through the whole phase that Florida is going through. It's going to be a disaster. You're going to see cases spike. And what, you're going to wait for a vaccine? Listen, I hope we get a vaccine. I hope we get a vaccine tomorrow. But use your common sense here. It's not going to happen, at least for a while. We need more people to get the coronavirus. It's going to be a good thing as long as it's coordinated. As long as we're looking at the numbers. And from some people living in Florida, hearing the stories out there of people not wearing masks, kids partying, it's such bullshit. Everyone here is wearing masks. Hospitals are open. There are ICU beds in most areas. You're not seeing infected people on the streets, say, oh, I need a bed to open up, or they're going to die. You're not seeing that. You're not seeing that. It's being reported. It's crazy. We have enough ventilators to where 25% of the population probably could get a serious case of coronavirus, and they're going to be covered. And we're in such shortage that we overproduce. No one's talking about that anymore, right? Ventilators? No, they're in a huge supply. That's great. But you're looking out there and the misinformation out there on COVID. And I know you guys have your own shows that you watch. It's insane. And when I post data on my social media platform, someone's been covering this and talking to good sources. Again, it's not going to be right all the time, but we have a very good track record so far. Those Twitter, Facebook, YouTube on my channels. Get angry emails sometimes with people who are just being misinformed because they saw a picture of a couple of idiots in Florida on a beach with no mask. It means the whole state of Florida doesn't wear masks. You can't get into any place in Florida without wearing a mask. At the whole entire time, everybody who worked for these places, now it's everybody that enters stores. There's signs on all the doors. You need to wear a mask. But it's amazing enough with it. We're talking about lives, right? And this is political. Where you're looking at red states want to open up and blue states don't. I mean, each governor should have his own opinion. And why the fuck is this political? Because as governor, you're not doing what you believe is in the best interest of the people living in your state. You're doing what your political party believes you should do in order to get votes in November, which is completely insane since we are talking about lives. How could this be political? And this is like a difference of opinion, or you're going after Trump and you don't like him, or you're going after Biden. This is lives. This is a coronavirus, guys. We got to be on the same page. I love the fact that there's leading doctors across the board saying, hey, you know what? Kids need to go back to school because if you're looking at the percentages, kids, it's extremely low. They're almost immune to this thing, which is crazy. Are you going to be able to cite a case of a kid getting it? Yes, of course you are. Of course you are. Absolutely. But for the most part, when you look at the data, it makes sense for kids to go back to school. And if you don't believe, I've seen that on that's like across the board, almost across the board. Not talking about far left, crazy right. I'm talking about just, Fox, CNN, and NBC. I mean, a lot of them are together on this saying, hey, based on the data with kids going back, it makes sense. It does. And I think it's like 65%, 70% of parents agree that this should happen. I know the risks. My kid has Crohn's. I know the risks, but I believe they should go back to school. I know I could take her off from medicine if anything happens. I also had them tested just in case. Everything came back negative because they had mild symptoms, a little bit of a fever. I was kind of hoping they got it because this way it'll be over with, because if they had it, that means they had it for a week and they were okay at that point. But no, everything came back negative for all of us, which is cool. But man, when I'm looking at this and seeing how this is political and information out there, sorry this intro is a little bit long, but guys, you have to understand, people who say we need to look at the science, just have that sign go, that flag go up. It's bullshit. Because you're looking at the science, and the science has been so wrong. And as a research analyst who really prides himself on research, getting it right, talking to people, a lot of these politicians are not talking to the people that are disagreeing with them. They don't care what they say. It's about an election. It's about getting votes. That's how bad they want power. They don't give a shit about you. They don't give a shit about me. That's my theme, at least for the past month and a half on this podcast. You have to look out for your best interest of you and your family, because the politicians do not care. They don't care. The only reason why they jumped on Black Lives Matters is for votes. They'll jump on anything to get votes, and you have to be aware of that. But the information out there, why we can't be more on the same page based on data that makes sense, is just crazy, especially as political. So be careful out there. I want to set the record straight. Someone's been following us for a long time. Look at my website, Curzio Research. You'll see the timeline, and you see a lot of things I'm right on, a few things I was wrong on, but everything's archived, and that's the way it should be. We should all have timelines of things that we're saying because we need to be held accountable. Because if you're looking at the data and you're looking at the science, you got to follow the science. Anyone who said that has been dead wrong. So if you hear that again, just be careful. Just know everything that comes after he says that or she says that is going to be bullshit, and you'll be fine. Moving on. I have an awesome interview lined up. It's with Marin Katusa, founder of Katusa Research, regular on the podcast. Have him on probably 4 months, 5 months. His track record has been insane. He's someone who's got into so many deals, someone that I've learned a ton from in the past 10 years, going on site visits, getting invested in a lot of these names that are finally starting to work out incredibly because he was smart enough to put 5-year warrants in these deals and things like that. But he's going to go over a lot, the gold industry, a lot of information. He's going to break down the whole industry. He's going to explain to you how you need to invest in this industry because everyone blindly thinks they should go into gold and go into gold stocks because the government's going to spend money and gold's going higher. It's not the case. Talk to someone who has been in this position themselves for this market for the last 4 or 5 years. Now it's benefiting tremendously. Who's Marin Katusa. But you're going to be interested to hear what he has to say about gold while everyone else is bullish. Again, a little bit of contrarian opinion here, but this is someone who's been dead on with his research. I know has made his subscribers and also made a lot of money in many of these deals. So we're going to break down all the steps you need, what you need to focus on before you invest, especially in junior minor stocks. And he's also going to give us the scoop on silver and whether he likes that industry as well. But really, really great stuff. And Marin's quarantined right now. You can hear a little bit of friction. You could hear the interview perfectly fine. You're going to be good. But he's actually in isolation because he visited a project outside the country and came in, and the laws he's going to go over right at the beginning of the interview of how crazy it is if you don't quarantine yourself and you don't separate yourself from everybody else in Canada. I mean, there's serious, serious laws that if they're broken, you're going to get in a lot of trouble. But he's doing this from isolation, from being quarantined. It's a fantastic interview. Just letting you know, it's going to be awesome. And finally, my educational segment, I'm going to talk about why it's separation time. What does that mean? It's no longer about sector investing. All airlines, casinos, cruises, and banks are going to go up because we have hopes of a vaccine. It's going to be about earnings. It's going to be about liquidity. Who will survive during these tumultuous times? That are probably going to last well into 2021, even if we listen to Moderna, who said sometime in 2021, if everything goes absolutely perfect, sometime in 2021, our vaccine will be commercially available. Well, if that's 12 months from now, considering it's only been 5 months since everything has started with coronavirus in America, that's a long time. A lot of businesses are going to suffer, but you're starting to see separation among the names within these groups. The names that are going to survive and the names who are in trouble. And you're seeing the difference in their prices, in their stocks. And that's where it comes to being a good stock picker and doing the homework and doing the research. Great segment coming up for the educational segment. But first, let's get to my interview with the one and only Marin Katusa. Marin Katusa, thanks so much for joining us again on Wall Street Unplugged.
It's my pleasure.
So you are in a quarantine zone because boots on the ground research. You left the country in Canada, you came back. I guess let's start there because you're going to hear you on the phone and the reception is good enough for an interview. But I just want you to talk about that a little bit because not about the project, just the quarantine process we talked about just before we got online here and went live. It's kind of crazy, right? The penalties, and explain that process for me. A lot of people don't know how it is in Canada.
Yeah, so a lot of people are just saying, hey, Marin, like after 3-4 days, if you don't have any symptoms, just go with your life. And I would love to do that, but you have to sign documents that say the government, the federal government here in Canada checks up on us. So if they catch us, they're doing it through phoning your cell phone. And if they're tracking your GPS and saying, you're not at the location you're supposed to be, if you get caught, it's $1 million fine or up to 3 years in jail. And, I just don't want to deal with that. So, here I am. I'm so bored and lonely that I thought, what the hell, I might as well even talk to Frank Curzio.
3 years. So if anything happens and you do go out and get 3 years, is it okay if I hire all your employees and take over your newsletter? You gonna be okay with that? Hey, I'm your friend. I'm going to let you know up front, right?
There you go.
All right. So let's get into it here because we've been friends for a long time, probably a decade now. And I want to start with gold because everyone's, now that you've seen all the gold commercials, it breaks 1,800. Everybody wants to invest in gold, but you have been positioning yourself for this moment for a very long time, investing in so many private placement deals, a lot of those that you share with me that are doing incredibly well now. From someone that's positioned themselves and is actually seeing a lot of your investments really take off now because you were in the very early stages. What is your position on it now? Because I always get scared when the whole world is on one side, and almost everybody would tell you have to buy gold right now, when nobody wanted it probably 12 months ago and even well before that. But are you still bullish here, considering we're definitely going to see governments around the world, central banks, they're going to continue to flood the markets with cash, and that's not stopping anytime soon. But I wanted to get your thoughts now as someone who's positioned himself and did fantastic in it and letting a lot of these things ride. But what do you think about gold now and gold stocks in particular?
Okay, so it all comes down to allocation size, your risk. So many people are now going down what I call the food chain, Frank, going to crappier, weaker management teams, riskier jurisdictions, earlier stage projects, because, hey, it's a gold market, right? And a lot of coconuts that were trying to do other types of deals are now coming back to the gold market. So I'd be very, very careful about what's going on. I'm seeing every buffoon and moron get financed. And you know my stance. So, I call a spade, and that doesn't make me the most popular guy in the world. The other thing I'd be very, very cautious about, Frank, for everyone listening to this, is a lot of the social media and all these guys trying to pump their returns. Well, liquidity is a huge thing. And you see so many guys going, oh, Marin, you did so well with Equinox, but look at my deal. I did, as good, and, I don't charge this or that. Yeah, well, look at your deal. It trades by appointment. It's a, $15 million market cap. You got to be very careful about, allocation size. What are you buying? What level? Now, look, do I think gold's going to go higher? Yeah, I do, actually. But that doesn't mean a lot of this, the deals on the street are going to go higher. How are they structured? Who are they? What is their cost base? I had a very, we can talk about the deals that you've gone in with me on. It's a very simple thesis. My subscribers and I get in at the same price as management, and then you're aligned. Your skin in the game is at the same price. Go with the right people. And, so like my subscribers have had an incredible run. But I've also advised them that, hey, we've had an incredible run. It's time to take a Katusa free ride. So if you sell 20% of a position and you got 80% for free, that's prudent and that's smart. And I'm also looking at now other sectors that people are scratching their head going, what the hell's Marin doing? And it's the exact same thing that they were saying to me a year and a half ago when I was going big into gold. So you got to keep things into perspective. And like you said, with every newsletter writer who doesn't have a pot to piss in is talking about all the money that they're going to make in gold, you got to start thinking other things. Because there's a difference between gold and gold stocks. They're actually like two very different things.
And it is interesting because we've seen gold prices hold up rather well from 2013, 14, to 2017, 18. But a lot of gold stocks have gotten crushed over that time. We had a little bit of a bull market. I think it was beginning of 2016, aside from that. But you're right. When we see with all bull markets, no matter what sector you're in, right, it's the shittiest stocks in a bull market you want to buy because they're going to go up the most, just like they're going to go down much more than the overall market during bearish times. Is now the time, because like you said, a lot of garbage companies are getting financed. But when I look at some of the PEs and these studies, and again, a lot of these projects for junior miners won't get developed for over a decade, but 2-3 years ago, they were based on $1,250 gold prices. Then they've been up to $1,450. I mean, if we go through 2000, it seems that some of these projects could be economical when 2 years ago they weren't. Are you looking at it from that kind of basis, or are you looking at it like, hey, the original companies we liked are even much more better now and likely to get developed, considering gold prices could push through 2000? I mean, let's start there with the process.
Yeah, so those are more advanced assets if they have like a Banco feasibility study that you're talking about, right? So you're looking at an asset that's been around for at least 5 years. It's seen, at least to get to that level, you're looking at least 25 to 30, 40, $50 million worth of drilling. So you've had a lot of time to look and study at it. So let's just take I don't know if you want to use a real example or not, but you got to look at the team who's doing the study, okay, and at what stage is the asset. So there's assets out there that are using $1,400 gold, and the economics look good. But now what happens is is it refractory ore? Is it not? What about cost inflation? Everyone's forgetting what happened in the last cycle where just, gold went 1,800, but the cost inflation, the actual cost to build the mines went up. The governments around the world, they wanted a higher take. The unions wanted a higher take. The royalties, they all wanted a higher take. The trucks and shovels, they all wanted their little take, and things started getting a higher price. Remember when I took you out to the mine, the tires were trading at, $40,000 a pop. You sit there and you're like, what? So these different things I use, and the guys on the street, like the smart guys, are using 1,450, 1,500 to run their economics. Remember, in January it was 1,500. So the financiers, the guys who've been around a lot, they're not using the spot prices. And more importantly, if a management team are saying, hey, look, we're going to get bought out because look at our economics at 1,800. The bigger mid-tier companies and the majors, they're not using $1,800 gold. Most of them are still using $1,400 gold. So the market is at a wait and see what happens to gold. Now, I do think gold will eventually go higher, but I'm also pragmatic about it that it could pull back, right? I could see gold pull back, and I'm fine with that. I actually hope it happens. We're cashed up, and there's some great value if it does happen. But the M&A, the mergers and acquisitions, it hasn't quite taken off the way people expected because the bigger companies aren't using $1,800 gold because they're comfortable with the cash flow that they're getting. So a lot of the stocks have run, and then because of the market caps of these companies, the bigger companies are going, well, at $1,400 gold, the market caps are expensive. If you use 1,800, okay, we understand it, but we're not ready to use 1,800. So that's kind of where the market's at right now.
So what would you tell investors to focus on? Because majors are going to be a beneficiary, but they went up for a while. They've been going up for a good 12, 18 months steady trend upward. Slow down a little bit. I mean, they've been going up, but kind of holding steady over the past few months. Royalty companies have surged incredibly, which is, just insane valuations, the highest valuations they've ever traded at. Or is it, hey, we're being selective in some of these juniors where we're still funding some ideas?
So for me, it's risk mitigation. Like yourself, I've traveled the world and I'm really looking at this from a macro perspective. Frank, I've done a video and I really urge all your viewers to watch my swap line concept. And it's hilarious. I've had so much negative feedback within the industry on the swap lines, yet I've had brilliant, experienced, super sophisticated guys like Tom Kaplan phone me up and say, wow, like I've never thought of it in that way. I really want to talk to you about this. And I actually recorded a video for my an interview with Tom Kaplan and I talking about it. And I really think with what's going on in the global macro perspective around the world, I think the big shocker is going to be how the foreign governments are going to treat the foreign mining companies with that gold, because gold is money and gold is access to US dollars. And I think this is the first time in my career that I've seen analysts across the board be so complacent with basically adjusting their risk tolerance. You're going to tell me that the risk that you put into a spreadsheet, your discount rate for something in Zambia, Zimbabwe, DRC, is going to be the same as in Nevada? Not a chance. But that's where we're at in this market, Frank. So, I've been around, I lived on the road for 15 years, man. I've sacrificed so much personally to get to where I'm at. And I'm looking at this going, yeah, you know what? I wouldn't bring my daughters here. I wouldn't bring my wife here. I wouldn't bring my parents here. And I think that's been really forgot in this market. And because so much money is being managed passively through ETFs. So it's like a fractured market. And, I don't want to get too much into that because I've written about it for years. But now you have this fragmented market where everyone's like, okay, what's going to be the next Equinox? What's going to be the next Liberty Gold? So I'm going to go further down the food chain. I'm going to take more risk tolerance. I'm going to go to Papua New Guinea, or I'm going to go to, all these different places. Well, I've actually been to those places, and I really don't want my investment dollars there because I don't think the market has accepted or truly understand or calculated the risk tolerance. The other thing that blows my mind is the gains, the cost of capital. Like, look at some of these deals that like some of the big streamers are paying up for. At 18, if you use $1,600 gold, their return is like 3%. So they're pushing this to the max because of their cost of capital. It's just not smart business. And when you start calculating potential changes in these negative swap line nations, there's going to be a rude awakening here. And yes, I'm not saying it's going to happen tomorrow. I'm saying over the next few years. But where I'm looking at is where the rule of law is respected, where you can just drive up to your mine site and look at things. And if I'm comfortable taking my family there, you do. Like, Frank, this is the irony of it. There's this misconception that you have to go to the inner jungles of Africa or some risky tolerant place to make the score. You've seen the returns I've made. I have outperformed everybody on the street, and I'm not taking any of the risks that the street's taking. You do not need to take those crazy risks.
Well, let's dig in a little further here, because one of the 5 things that I focus on when it comes to investing in a lot of these junior miners, especially, right, are, the management team, make sure that they're fully funded, strong balance sheet. They're not going to have to raise a ton of cash, at least right off the beginning. Geography that you've been talking about the whole time, right? Also, infrastructure in place. People don't realize how much it costs for water, buildings, roads, and lights. Make sure the project is actually good, right? It could be scale, and last is, insider ownership, making sure they have stake in the game. That's my playbook, which I've learned from you. I've learned from Rick Rule. I've learned from, just following you guys around for such a long time and going to projects with you. Take us through this, because one of the deals that we've actually shared, the private placement in Curzio Venture Opportunities, one of our newsletters, with Equinox Gold, which is a company that you put together. Explain that, because to me, it's remarkable. And, I'm going to pat you on the back here, and I love it because every time I pat you on the back, you're like, I know, baby. But what you did for Equinox, seriously, this is going to be painful for me to do, but I have to pat you on the back, because the group of people that you brought together, how you structured this. And it was funny because even I got a little shit from my subscribers at the beginning because the gold market sucked. But now you're looking at Equinox Gold, new high, continue to surge, everything in place. Talk about how you put that deal together, because it actually, as you talk about that, it filters into almost everything that I talked about that you've taught me to focus on when you're investing in these stocks. I think it's going to be incredibly helpful for our listeners.
Well, you were actually the initial seed of that happened was on the flight back from Pebble. Remember when we were on the Pebble flight in like July 2016, and on that charter plane back. It ended up that David Lowell was sitting beside me, and you remember how amazing it was. Remember that dinner, rest in peace, David Lowell. But remember, I'm kind of like my crew are these older, brilliant minds that I love hanging out with and learning from. And remember, you were sitting beside me, going like, this guy's drinking more than us. He's hanging out late night. He had his dessert. It was 11:30 when we walked out of Anchorage. Remember, it was like still sunny. It was just such a mind twist for all of us. And then on the way back, he was about an hour into the flight, or 2 hours, or whatever it was. He goes, man, I really enjoyed this trip. He goes, I think you're onto a monster here. I'm going, thanks, David. This has been a lot of work. I thank you so much for coming. He goes, you remind me of my partner. And I go, he goes, my first partner in the copper business. I go, I didn't even know he had a partner in the copper business early on. And he goes, he was a ball of energy. And he goes, he handled all the business stuff. I did the geology. And, at one point, I think they owned 2/3 of all the copper porphyries in the world. They just made a fortune. Like, a lot of people didn't realize that he was a multi-billionaire. And he was like one of the down-to-earth guys ever. Someone that I'd love to model his personality, just how great he was and generous with his time. And he goes, let's do a deal together. He goes, I want to be partners with you. He goes, you give me energy. And I go, oh man, David, my life is so busy right now. I've got Altera, I've got this a dynasty. I just spun out, my own company. I got my whole staff. And remember the day before we left, my house flooded. Do you remember that? House flooded.
Yeah.
So I was just like, I was up to my eyeballs in like stress and headaches. And he goes, Marin, it'd be really fun. Think about it and let's do something together. And I thought about it and I said, hey, like, what happened to your partner? Like, did it end like negatively, or like what happened? He goes, oh no, he died of a heart attack. I went, oh no. Right? I was like, okay, let's help those parallels end there. And I said, look, David, I go, rather than doing a new deal, why don't I help you solve one of your headaches? Lowell Copper had incredible assets, but it was stuck in permitting and the market cap was pretty cheap. And I always wanted to buy it, but it was one of these things, like, it was so tightly held by David Lowell, Dave DeWitt, Marcel DeGroot, Catherine McLeod, and Lucas Lundin, all great names in the game who've been around for a long time. And they would always finance it themselves. And I don't know if you remember when I took you up to what was supposed to be Copper Mountain 2.0, and the vision that I had is when we started Copper Mountain, we created Gold Mountain, which when we were going to sell Copper Mountain, I'd take that team and build a gold company back then. That was kind of my vision. And then we got kind of stuck, and David loved the idea. I said, well, why don't I bring these assets together? And he goes, okay, great, you're going to run it. And I go, no, man, I can't run it. And then I thought of Greg Smith, who I always had a lot of time for, but we never did a deal together. And he was running something called Anthem United. Anthem United was like a toll milling agreement in Peru. And he was kind of stuck with it too because of the whole permitting and all that. So he said he loved the idea. So as we were working out the deals, from the airport we landed. I drove David to his hotel within that 20-minute ride from the airport in Vancouver to his downtown hotel. I phoned up Marcel, Dave DeWitt, Greg Smith, and Jim O'Rourke, the three majors of each deal principals, and I said, let's meet the next day. And literally in 30 minutes in a room the next day, there was a photo of it, actually, all of us together I took, and they agreed to all the terms. We raised the money, and we called it JDL, named after James David Lowell. That was the ticker symbol. And then we went after the first asset, which was the Arizona, and then we convinced management to do the merger because we were able to raise the money. So for my newsletter, we raised $140 million without taking any fees, and it went right into the company. That was kind of the advantage that I had over the bankers at the time. Not a single brokerage could do that in the business. To give you a perspective, it took two of the largest firms in Canada, two of them combined, to work to make 20 million, and we did 80 million on that one financing. So they did 20, I did 80. So then that's where Trek was born, and I hated the name. That was Christian Mila. It was the only time we ever had a disagreement. He's a good guy. He became CEO. Greg Smith then became president, and Marcel was on the board, and that whole Jim O'Rourke, and they worked together. And the asset was the Arizona that Roman Schlenko was my geo, and David Lowell really liked. So I went, look, if the two best geos that are living on the planet today give it the thumbs up, I'm going to go for it. But like you said, the amount of hate that we got on the street, all the trolls trying to bash it, blah, 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 whatever. Put your head down and get to work. And, you saw how much money I invested into it to make it work. So during that same time, so we're talking now, I guess it was maybe May of 2017, during all his financings, because Ross is a good buddy of mine, he likes my style, I'd put him into all the deals that I would do. And I was in his office, our weekly coffee meeting, and I brought up the idea. I'm like, look, going back, I was one of his largest shareholders in a deal called Altera that was doing really well. And towards the end of the meeting, I'm like, hey, Ross, I got an idea for you. It's different, but think about it. You have Anfield Gold. It was it didn't work out the way as expected. And he has a cash box for about $55 million in cash. I said, why don't you merge that with Trek and become chairman? And Ross said, well, man, I actually had a different plan, but that's an interesting idea. And when he shared with me what the plan was, he was going to merge it with his friend Richard Rourke's deal called Castle. And I knew the asset. And I said, well, that's a big asset, but it's not going to be producing for a few years. We're ready to go. We're permitted. And Like, we're building it. And he goes, really? You think you're going to build it? I go, I'm telling you, we're going to do it. And Ross sent his crew down. Then he went down. And he goes, look, man, are you open to a three-way? I go, well, okay. Let's, we started this with a three-way. So there's a merger of 3 companies and a merger of 2. And then we ended up doing a three-way. So we did that many deals in 16 months. And Ross became a chairman. But I said, let me name it, because I hate the name Trek. So I remember on the Friday night, and I kept the emails because Ross, and I said, you guys will never remember me doing this, so I'm keeping the emails. And he goes, don't you got something better to do on Friday night? And I said, actually, I don't. I really want to name this. And I said, Ross, your first big deal was Equinox. I think this will be your last big deal, so why don't we call it Equinox? He loved it. Greg Smith came up with the ticker symbol for EQX, and Ross just took this. He invested somewhere in the order of about $150 million of his own money. He was able to bring Mubadala, Richard Warwick's capital, and then it was really Ross who spearheaded Los Feliz takeover, and now it's it's Ross's deal. He's the chairman. He's the guy. He's the force of it. I'm still one of the largest shareholders, and this is going to be a 1 million ounce producer internally. Like, they don't need to buy out any other deals, and they're fully funded to do that. So it's an incredible situation, and it gives you a real-time perspective of how hard it is, even when you're doing it, how expensive it is. And even if you bring the best people in together, we were trading at like 0.4, 0.5 NAV for 2 years. And I kept telling everyone, like, this is my number one pick. This is my number one pick. Now it's trading, if you use, 1650 gold, is trading about 1 times NAV, but it's still discounted compared to its peers. If you use $1,500 gold, I guess it's about fair value now at NAV. But if you compare it to another pick that we did, like B2 Gold, which is run by Clive, it's a lot cheaper than its peers. But that's going to change, and it's a great deal. So that's kind of people, the projects. Every single project in a positive swap line nation. You've got, look, man, there's no one better than Ross in the business. And my subscribers' average cost base is cheaper than Ross Speedy's by following that pattern. Now, think about that. The guy who's invested more money than anyone else, and he's the chairman, and the market provided you an opportunity to buy stock cheaper than him. That's how you play this game, right? And it was funny, Frank, like, we had so many subscribers saying, oh man, like, this isn't working out. And I just keep saying, I go, look at the value of this. This is going to work, but you have to be patient. This game's not day trading. It's truly a marathon investment. So that's kind of the style of what we do.
Yeah, and you can see why people were getting upset, because the market was surging, right? And they're seeing this position in gold and going, wow, I'm sitting here in gold, we're not doing anything, but the market is surging, where the Microsofts and Amazons are going up 15% a month. But more to the point here is it checks off all the boxes, guys. And that's the purpose of Marin going through that story with the management team and of cash, the geography, the actual projects that you put together, the insider ownership. Ross Beatty run the show, and this is 500,000 plus one of the largest producers, and their all-in costs are at around $1,000, so which is pretty incredible. So great job on that.
It's lower, yeah. It's less than 900, and but it comes down to it. Like you got guys like that are no longer on the board, like Marcel de Groot, Nolan Watson, Greg Smith. Dave DeWitt, Catherine McLeod. Like, Lucas owns about 4% or 5% of the company. Lucas Mundine. It was just a great group of guys, and there was never any arguments. There was one time that when we were merging JDL with Trek, there was one fund manager, and they said, Marin, you're the pit bull of the group. Why don't you deal with them? And it was a interesting 3-hour WrestleMania meeting, and the deal happened as I wanted. But sometimes this is maybe one thing that people have to understand. If there's a large fund that's inside the stock, and their cost base and terms in the deal are different than the shareholders, their interests aren't aligned, and that was a big hurdle for for the company that we took over beforehand. So, so many people, like, you have these geologists or, everyone focuses on their areas of strength. But sometimes you just got to pull back and go, okay, who are the players on this chessboard? And what are their interests in this game? What are their cost base? Are they looking to just roll more debt into this and control the deal? And then management are just employees and shareholders are just a nuisance. So you're going to actually, and that was something that, I took on full handle, because my style is, I call myself a positive activist investor, where my subscribers are in at the same price as me, and I'm the voice for all of us. And, you have to be very careful about what type of fees management teams are taking, what type of bankers are they using, who are the board? Are they just cronies, or are they actually there to represent the interests of the shareholders and moving the deal forward? When you look at, Jim O'Rourke and the impact he had on the deal, today his name's nowhere on the power deck, because now it's Equinox and it's a much larger story. But, he was key to the early days. David Lowell's name is nowhere there. But, let me share about the spin out. Today, the spin out is going to be worth about $200 million. We financed it at a $15 million valuation, and I was being made fun of on the street for doing the deal. Let's think about that, Frank. And I said, these are the copper assets and gold assets that David Lowell, the greatest living geologist, like, think about the greatest artist in the world, saying, like, hey, and you know that it's trading at half the value of what they put into the ground on these assets, and it's stuck because of permitting delays. It was a no-brainer to me, and I wrote this. We will spin this out one day. And then all the Equinox shareholders that were with me, remember when we did the financing, got a full 5-year listed tradable warrant, which is called the Katusa warrant, as Rick Rule calls it. And on top of that, for every 10 shares of Equinox you held, you got one share of a Solaris spin out. Well, that's trading at $1.50 today. Our value on that was, I think, 20 cents when we spun it out, right? So think about all of the dividends that you start getting out when you work with the right people, with the right assets, and you finance it at the right time.
Yeah, it definitely makes sense, and really great job on that. So I wanted to get to two more things really quick. The first is silver, right? Which is a market I know that you cover as well. You're like me, when I see people mention the gold silver ratio, I think it's completely useless. At least that's why I'm getting the indication from when, a couple of you post on your Twitter feed. But silver is breaking out here. I mean, it's close to a 5-year high where it's over $19. The 5-year high was a little over 20. That was in 2016. Massive move from the March lows, which was trading 12. But I'm not seeing the same move in silver stocks as I'm seeing in gold. And that gold price has gone up actually slower than when you're looking off the bottom when compared to silver. Is silver something that's attractive to you here? It seems like it's cheap based on where prices are, but again, it's not gold, and not that many people talk about it as much. But I want to get your thoughts on it.
So silver is an interesting, what they call it, the currency of gentlemen, right? The problem with silver is it's mainly a byproduct metal, and it's split between an industrial and a precious metal, meaning about 65 or whatever the percentage is used for industrial uses. And the global economy has been really bad recently, right? Look, I think there's a place for silver in your portfolio, and like, I've got a whole team that handles marketing and all that. They're like, look, man, you gotta do something on silver. I'm like, why? And they're like, well, because the market wants. Like, well, I don't do anything the market wants. I do what I want. But when I put something out on silver, it's like the magnitude is wild. It's like the hardest core. They're like gold bugs on steroids or on crack, right? They're just believers in it. But here's the reality of it. Very few primary silver mines are economic. Okay, I've been to many, many, many of them. If you want silver, the way I played it in our newsletter, we had a big win, was Pan American. And again, it's not because the chairman's a good friend of mine. It's Ross Beatty. I bought it because it was cheap when we recommended it. It pays a dividend. It had no debt. My cost base was, at the lowest point of 5 years. That's how I like to do things. But I'm seeing so many, early stage silver showings. these little crappy sub 50 million ounce silver assets getting financed. Those are silver value traps. Be careful of those. So yes, I financed a few silver projects, but right now I'm risk off, taking Katusa free ride on all my silver positions and gold positions. And people say, "Oh, he's bearish on gold." No, if you're in a position where you could sell 20% or even 25% of your holdings, and you get to keep 80 or 75% for free, you are stupid if you don't take that. Now, granted, it may go a lot higher and I've left some money on the table, but who cares? It's about risk mitigation. And Frank, if anyone gets anything from listening to this, whatever, my track record is there. It's not about bragging or pumping my tires or doing that. It's really to explain to people that this game can change so fast. And look how we saw it in 2016, how quickly that market, the window closed. So be careful when the liquidity shuts down. You could see these stocks go from, $15 to $7. Look what's happened with Barrick in the past. Gold Corp lost 2/3 of its value. Now it's the largest gold mine in the world. I'm not saying that's going to happen, but I'm saying for your own portfolio, for your own family's, future, risk mitigation is the smartest thing to do. And specifically retail guys out there, like everyone, specifically your crowd who's listening to this, they don't have the positions that they're locked in a big way, whether they're an insider or reporting. You really have to take a free ride as quickly, because the key to this game, whether the management teams like me or not, part of the success of my career, Frank, is having cash available when the market is down. The bankers can't raise anything because they blew up all their clients in the past. And think of going back to Altura, Northern Dynasty, where we did Equinox or Liberty or any of these deals. You are valuable to these management teams when in a bad market, they know you can raise money or invest in the capital. So having cash when everyone is fearful, that's the position you want to do it. And to do that, you need to sell some off the table when everybody's pounding their chest. And right now, every banker is excited. They're flying around, even though it's quarantine, they're still moving around or zooming around. People are making money again in the business. And that's when you need to reduce your exposure a little bit, take your money off the table, have a strong float. I'm not saying sell everything. I'm not saying I'm bearish. I'm just saying be smart.
No, it definitely makes sense. So we got like 2 minutes left here, and thanks so much for explaining all that, because it does make sense. It's just a greed factor. And also, guys, don't forget, when you're selling some of this out, provides liquidity for you to buy more positions or other things you like. But in 2 minutes, any ideas that you're looking at? I know you like to share a lot of those ideas, not necessarily there in your portfolio. People pay for that for your newsletter, but at Katusa Research. But anything that you're looking at that may look attractive, gold, silver, any names that you might want to share that, again, you could just be looking into right now.
I got two things for you. Everyone's bashing Warren Buffett right now, and I find that really interesting, that the greatest investor ever is getting disrespect from the market. Yet guys who are, holding cigarettes and swearing on their promos are getting like more follows than the legends in the business. Stick to the rules of law and gravity. And I'm with Warren on this. This market could go higher, probably will go higher because of what's going on globally, but there's nothing wrong with taking money off the table and having a lot of US dollars. Number two, I'm looking at an energy deal, and people are like, "Why? I want gold." And I go, "That's exactly why I'm looking at this energy deal. It's in my newsletter, and it's coming closer to my target price. I've been waiting 5 months to get that target price, and it's been in my newsletter, and I'm saying, don't pay it, relax. The market's going to get bored." And that's kind of where I'm looking at, to be a true alligator in this investment. When everyone else is chasing the prey, that's not the way to play. You want to be, just sitting there waiting for the right price for the right time. And then the other thing is, I just got a thing in my inbox about the Frank Curzio 12-day body. So that's what I'm working on right now during my quarantine. I want to look like you, Frank.
I'm trying to get in shape. I'm trying, buddy. So listen, as always, Thanks so much for going on the podcast. I know that you're doing this in quarantine. And by the way, you know how close of a friend I am to you. So if you need anything, if you need, your Playboy magazines or whatever, I promise I won't tell anyone. I'm not going to tell anyone. I'll send them to you because I'm your friend. I'm there for you, buddy. No matter what. We all get it. I understand. But just want to let you know, I'm always a good friend when it comes to stuff like that. But
I appreciate it.
All right, cool, buddy. So listen, thank you so much. Thanks for the explanations. It provides incredible value. We've known each other for a long time. I love that you come to this podcast. You always provide value, and more important, you provide winners. And I know people respect that. So thanks so much for coming on, man. I really appreciate it, buddy.
Stay well, buddy.
All right, guys, this is always great stuff from Marin. I mean, I love that Equinox story. That was fantastic. A little bit long, but it's important that he went through that to show you the steps that I told you about. And it's important because this is an industry, when it comes to resource sector, the biggest scam industry that I've ever seen, up there with utility tokens and crypto. And that's how bad it is. It's, I've seen people who trying to just feed off of so many people in these crowds and having these major conferences, but some of these deals are just a joke. The promises that they make, these people who are doing these deals make a fortune, and hopefully if gold goes higher, everybody makes money, but if it doesn't, they make money, nobody else does. And to see it firsthand of how much shit takes place in that industry, it's important to listen to the right people. I've been fortunate. Jeff Phillips, Marin Katusa, Rick Rule, and these guys have introduced me to some of the leading CEOs of the whole entire industry, including CEOs of majors who've taken trips around it. You have to go through that process, and I'm trying to help you avoid it because I'm telling you, 9 out of 10 times, if you're going to go into a private placement in this industry, or you're going to buy a stock in there and say you don't have a crazy bull market where everything's going to go up, you're going to get murdered because most people don't care. And not only that, you'll see people, biggest red flag to me is when you see someone, hey, this is the best project and I'm on the board. Next thing you know, 3 months later, they're pitching you on something else. And they were pitching me on marijuana, and marijuana was great. They were pitching me on crypto, and crypto was great, and blockchain technologies and mining and all that stuff, like data mine. And I'm like, wait a minute, if you're investing, someone's investing in your company, why are you focused on other things? I mean, it's crazy. But you see this a lot. They go to areas where they can make money very, very quickly. And when you're looking at junior resource companies, remember, 1 out of every 3,000, this is from Rick Rule, 1 out of every 3,000 projects, from the point you put a stick in the ground and say, here, we're going to start doing studies on this land to the point where you actually are producing mine, it's only 1 out of every 3,000. Think about that next time you go to PDAC or any other conference, which is pretty great. So again, questions, comments, feel free to email me, frankcurzioresearch.com. Love having Marin on. And I know that he's made a lot of money for my subscribers. Equinox Gold, we were able to get into that private placement. I sent that to my Curzio Venture Opportunity subscribers, where private placements are open to them. Going to be coming up with a couple more private placements in the next month and a half, some things I'm looking at, and, gives you access to that. Again, I can't collect fees just like Marin can't collect fees. I could only do the introduction there. These are deals that are vetted by me, Marin Katusa, Jeff Phillips. I'm very careful before we get into it, making sure they're structured correctly. Again, we don't collect fees or anything on these. Marin doesn't, as newsletter writers. So we want to make sure that our only benefit is if you make money on these. But Equinox Gold has done very good for Marin. And that's also done good for Dollar Stock Club members, which are up pretty close to triple digits on that stock since last time he came on. So really great stuff. Love it. Now, let's get to my educational segment, which is about separation. Okay, what does that mean? We've seen sectors, right? When we get good news on the coronavirus, like we're seeing now, right? Today, we're going to see cruises go higher, travel stocks go higher, all these stocks that are impacted the most by COVID. Those sectors are going to go higher when we have positive news, right? Just like they're negatively impacted as this takes longer and longer, where they got hit the past couple of weeks as more places are deciding to close down and we're seeing cases spread. But an interesting trend is taking place. Look at the banking industry, right? Goldman came out today, reported record quarterly net revenue in their investment banking business, including record quarterly net revenue for both equity and debt underwriting. This is something, if you're a subscriber to my services, you should be very familiar with, that this is going to happen. Why? Because Goldman is not leveraged to the consumer like traditional banks. They're leveraged to the stock market. They're leveraged to volatility. In other words, the more volatile the market is, the better their systems work, which basically front run the market, which you all know. They don't care about what stock they're buying or who's running that company. They're able to see all the orders in the market and act a million times faster than everybody else. Again, it's an amazing story. I can't believe the SEC is okay with this, but hey, that's fine. That's okay. That's okay. Anyway, they're leveraged to SPACs, which are the new vehicle where, the new IPOs. Just Google that. You'll know what I mean. Special purpose acquisition companies. They just set up on the exchange as a public entity, and it's a holding company where it could be 30 million, 100 million, 50 million, whatever. And then they'll go out and buy a private company, and immediately they don't have to worry about the costs and going through the whole IPO process, and they become a publicly traded entity. DraftKings, looking at several of these. Nikola was another one. I mean, a lot of you're looking at the biggest hedge fund managers, and now you have the biggest investment banks are getting into SPACs. Again, everything that they're looking at, you're looking at IPOs. I mean, how good have IPOs have been launched been doing? You see that market starting to take mergers and acquisitions. We're seeing that, right? Lots of mergers and acquisitions. These are all monster growth markets where the Fed's injecting trillions into our economy, and trillions more is coming. That's going to benefit Goldman, but it's not going to benefit Wells Fargo, where the numbers were horrible. We'll be cutting their dividend. His CEO Charlie Schwartz said, demand growth has largely stalled. It was growing at a nice clip through June. He says the virus, unfortunately, was also growing. And if you listen to some of the banks, even JP Morgan, Jamie Dimon said, thank God for the government and stimulus spending, because he's seen the trends out there. These guys see the trends of consumers, and it's not pretty. It's not pretty. You're looking at airlines. Delta, fantastic quarter considering the market conditions. Cash burns under $10 billion a year and has close to $16 billion in liquidity. That's what you want to see. Why? Because the virus, I say in 12 months, we will have a vaccine. And that means Delta's going to survive. I can't say the same for American Airlines. Also $15 billion liquidity, but much higher cash burn. Others, smaller airlines, Southwest is in pretty good shape. You're looking at American, still raising money, so they likely need to lay off 20,000 plus employees. Look at rent-a-car companies. Hertz, bankrupt. That's great news for Avis. Avis is going to take huge market share. You say, well, Hertz, file for bankruptcy. Again, they're under those bankruptcy laws. They're allowed to operate, but still, it's going to be a different business, right? They're going to have the newest technology, the newest cars. They're cutting costs. They're going to have as many people working for them. It's going to, hurt their brand. You're going to see a difference. Avis was smart. They cut costs a lot sooner than Hertz. And they're going to take huge market share. They have liquidity. They're going to dominate this industry, which rental cars is a monster industry. Just got saturated with so many companies, right? Now you saw consolidation and Avis and Hertz buying up a lot of these names. Well, we recommended Avis in our Curzio Venture Opportunity newsletter late May. If you have Curzio Venture Opportunity subscribe, don't get mad because you're up 35% in just a few months. But if we get a vaccine in 9 to 12 months, this stock is going to more than double. The names that are going to survive, think of the dot-com era. The companies that went bankrupt, the companies that survived. There's a reason why technology companies have the best balance sheets in the world, because they lived through that moment and came close to going bankrupt. But if you go through that process and you get smart as a company, you become lean, you know what to do when the next crisis comes, what you need to cut. It's an amazing learning experience if you can get through this. Avis is through it. Hertz didn't make it. Cruises, casinos, travel-related stocks. Guys, this is what I want you to do during earnings season. Pay close attention, not just to the sectors, but individual names. They're going to be reporting earnings over the next few weeks. Pay close attention to liquidity. Because when you look at these sectors, they've largely gone up or down over the past few months based on the status of the coronavirus. And going forward, assume that's going to be over 12 months before we get a vaccine. So it's going to be about earnings, sales, liquidity, which earnings didn't matter now. But sales, liquidity is very, very important because you're going to see profits come down incredibly. You're going to see sales come down incredibly while we're closing more places for some of these businesses. And not all these companies will survive within these industries. And the ones that do are going to see incredible growth over the next 3 to 5 years. That's where you want to position yourself right now. So be sure. Don't just say, hey, the cruise lines look good. No. Look at Carnival. Look at Royal Caribbean. Look at all of them. See which ones, look at their liquidity, and make sure they have enough liquidity to last over the next 12 months. Because when we get a vaccine, these are the names that are going to soar. And the ones that don't have enough liquidity, are either going to have to raise money and dilute the hell out of shareholders. If you go to debt, raise money through the debt markets and pay an insane amount of interest. But if this thing lasts longer, those are the companies that may not survive. And when this business starts booming, why is it going to boom? Because the Fed is spending trillions right now, 30% of GDP to fuel this economy, which is insane. And more money is coming, which means we're only going to have to operate pretty much at 40% this year in order for GDP to really, and our markets to actually grow, because the Fed is just, and all the policies and the stimulus is insane right now, but that's going to fuel the companies that make it through this over the next 3 to 5 years. You want to be invested in those names. You don't just want to buy sectors or ETFs. Start looking at individual names. That's what we've been doing for our newsletters, and we've been nailing it in both, at least for me, for Curzio Venture Opportunities and also Curzio Research Advisory. Okay, guys, so the time is here. We're launching Unlimited Income this week. If you're on our email list, you'll get a notice. If not, just send me an email, frankcurzioresearch.com. Most of you are on our list. Please, if you sign up to that product, do so through the link that we send you. That's where you're going to have a special discount. No bullshit. It's going to be incredibly cheap, guys. Trust me on this. I made it affordable for everyone because this is an area that people are dying for income. Rates are going to stay low for a considerable amount of time, and there's going to be trillions flowing into few select stocks. And that's money that's going to come out of the bond market, 0.7% in the 10-year, which is crazy when you're looking at a 1.7% yield on average in the S&P 500 for the companies that have those safe yields. But it's not just about yield, not just about income. There's a lot's going to go into the product. It's going to be run by Ginnia Terranova, one of the best income analysts out there. Added several income newsletters over the past 15 years. She's going to be running this product. We already have beta versions going out to some members, Curzio One members, and people signed up for her for newsletter, Money Flow Trader. So it's going to be plenty of recommendations already as soon as it comes out. We'll also include several special reports showing the mistakes most investors make when searching for income. Please, please, please read all those reports. They're incredibly valuable. So we'll launch this week, next couple of days. It'll be available to you. Very exciting. And of course, we're going to offer a 30-day money-back guarantee for those of you who are on the fence. But definitely take a look at this product. I promise you, it's going to be worth the value that we're charging by a factor of 10x when you see the price on this. And I'm doing this for you. And this is the product that my subscribers came out that I said, hey, what kind of newsletters do you want us to produce? Income, by far, 80% of the responses. That's what we're doing, launching this week, finally. I'm very excited. So Unlimited Income, be sure to check your emails. Okay, guys, that's it for me. Be sure to check out our Curzio Research YouTube page. Post a lot of videos now, going to video format, even with podcasts pretty soon. I'm tweeting a lot more too, at least 3-4 times a day, and doing live videos probably 2 to 3 times a week. So you can do that, Frank Curzio. Feel free to send me a tweet. But yeah, a lot of great stuff going on, keeping busy, and really looking forward to the launch on Unlimited Income. So any questions, comments, frankcurzioresearch.com. Thanks so much for listening. Really appreciate all your support. And as always, I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.